Of all the households in America, 16.6 million have a negative net worth. Of those that do have a positive net worth, the median is under $100,000. Frugality did not get them there. Households headed by people 35 years of age or less have a mere $11,100 as a median net worth. There has to be a better way. And remember, when I'm discussing things like median net worth, you have to understand what that means. If I say the average American household has less than $100,000 in median net worth, it means half of those people have less. When I talk about families aged 35 and under with an $11,100 net worth, I mean half of those people have even less than that. One, medical. Millionaires know that getting their regular checkups, taking their prescriptions, taking care of their health in the form of exercise and diet are vitally important. Because before you can get wealth, have real wealth and keep it, you need to keep yourself in good shape. And if you don't have your health, it doesn't matter how much money you have. Two, legal. Without a good legal team and plan in place, it is very easy to lose your net worth in an instant. A lawsuit, an accident, or any other event that can harm you financially is something that you need to prepare for. Having the correct legal counsel makes a difference of preserving your wealth or potentially losing it. So millionaires know it's not just about making it, it's keeping it. Estate planning is more than maximizing your legacy. It's about protecting your wealth while you're alive, making sure the money that you have goes to the beneficiaries you would like, including any charitable giving. Asset protection is also a vital ingredient for people that are wealthy. If you want to be a millionaire, and even before you reach that status, protecting the wealth that you have is vital. Doing it yourself can sometimes be cheaper in the beginning, but later on can cost a lot of money. If you have a legal professional help you put together your documents, they're likely to stand up. And remember, once you pass away and you leave your legacy, you don't get a chance to redo it. You're going to have to live with it, or, well, your family will. 3, accounting and tax. Taxes. When it comes to millionaires, they know how to deal with tax issues. Their tax accountant is their best friend. When it comes to all the taxes you pay, income taxes on a federal and state level, sales taxes, property taxes, excise taxes, and more, can easily take 50% of all the income you'll earn in a lifetime. And millionaires know they got to cut that expense. Low fees are not the goal of a millionaire, quality is. They know that their investment in time and money with a tax accountant can save them 10 times or more in their investment. If you're going to save on the biggest expense in your life, you have to have a relationship with a quality accountant that knows the tax code. 4, education and consulting. And this is where it all comes together. Education. Education isn't to learn, it's to teach you how to think. And once you know how to think, if you're going to be a millionaire, you're going to spend the rest of your life reading the books, taking the courses, doing the continuing education to learn the things you need to know in your specific area. Now keep in mind, this changes over time. So you have to learn how to learn, and that's what colleges are here for. If you learn how to learn effectively, you can become amongst the greatest. You get names like Elon Musk or Warren Buffett or Bill Gates. Millionaires and those soon to be also focus on certain areas. They'll focus on things like investment, wealth creation and retention, and in their business. And then people like Elon Musk actually are engineers inventing the technologies that virtually everyone uses. 50 years ago, nobody heard of Windows, and now everybody uses it. Maybe in 10 or 20 years, everybody will be driving some kind of electric hybrid vehicle, or maybe just a pure electric vehicle as well. And education is something most people consider as very expensive, and it is. Education comes with a pretty dear cost. Student loans are certainly a problem. But the fact is, if you get the right education, get the right information, the right knowledge, you can multiply that investment by 10, 50, 100, or even 1,000 times. And that's the difference. If you talk to an accountant or your attorney, you might get a 10-time return on your money. The attorney might just protect 1 times your money. The accountant might save a percentage of your money. But the money that you invest can turn into multitudes of order because of the education you have and the learning that you've had that started at a university. Millionaires also want to look at something else that is unique. They're always looking to reinvent themselves and their business. The reason? Because if you don't find the product that's going to replace you, your competitors will. It's all about this reinventing yourself and become the company that's going to be replacing you in the future before somebody else does it for you. And that's what education is all about, learning to learn. And until you learn how to learn, you can't really, truly create anything. So once you know how to learn, you can then actually start learning. That's what education is. 5, insurance. Insurance is something most people don't want to spend any more than they absolutely have to. But the reality is, it's the kind of insurance you buy that makes a difference. So for example, the stuff that you buy at a retail establishment for $100 or $200 item is pretty much a bad idea, and millionaires just don't do it. And in fact, your credit card and debit card probably provide the insurance for free anyway. But if you have something more expensive like an automobile, you might want to cover it, but if that automobile has a smaller value, let's say $5,000 or less, you may want to go ahead and reduce that insurance as well. And that's what many millionaires do. But when it comes to things like liability insurance, the kind of things that would take you out literally should you have a big enough lawsuit, is where the insurance will be purchased by wealthy people on their home, on their business, on their rental or income properties. Having the correct amount of insurance, and in many cases this can be rather large depending on your net worth, you will spend more money for an umbrella policy. There are just over 126 million U.S. households, with 16.6 million with a negative net worth. That is a significant percentage that haven't even reached zero. Half of all households have less than $100,000, and that includes people that are in retirement, just gotten to retirement, and most of that net worth is in their home, which they've built some net worth just because of time, and in their retirement account like their 401k, things that are more difficult to get their hands on. If you exclude people's homes and their 401k and other retirement plans, the average American, the median if you will, is almost zero. And that's the damning indictment we need to address today. Because you see, it's not frugality, it's what you spend on as well. And if you spend on the right things, like millionaires, then you can be one too. And I think I will go further with that. Hello. Hello.